What's going on, guys? D. Anthony here with Evolution Traders. What I'm going to go over is the NASDAQ futures, the ticker symbol NQ. So what we're looking at here, daily time frame, each individual candlestick is going to represent a full day's worth of trading. I'm going to kind of give you guys my thought process and what I'm exactly thinking for tomorrow. So we're going to keep things very, very simple. There's going to be two sides of this trade. Just like every day you come into the market, you have the potential to go higher, you have the potential to go lower. But the good traders are ones who understand that you need to be ready for both sides of the trade. Now, we're not long-term investors, we're not long-term swing traders. So for us personally, as day traders, as scalpers, it doesn't particularly matter whether the price action is going long or going short. All we need to do is identify pockets and areas of opportunity where we can get in, make a little cash flow, and then protect that cash flow and come back and do it again tomorrow. Now, it's easier said than done. Again, there's a lot of things that go into that, such as the time frame that you're trading, such as your own emotions and your personal attachment to money, such as your account size, and such as your overall mindset and state of being, right? So what we're looking at here, if we get a little bit of a dead cat bounce overnight into the pre-market, I'm going to be looking at a couple of areas as supply. So first area that I'm looking at as supply is going to be the linear regression. It's sitting at 17,369. That is going to be the first stop. So if we do make this push into this area, see if we do get rejected. Now, for me personally, I'd like to see the NASDAQ futures get over 17,500. This could take a little bit of time. And the reason why it could take a little bit of time is it's around 250 points away. But that 5-day moving average is normally the shortest term sentiment for whoever's going to control the chart, normally for the next 1 to 2 days. Okay, so kind of look at it as your power trend. Now, there's going to be a lot of traders who are a little bit late to the party and they're looking at Friday's close and they're coming into the market and saying let's short everything, and next thing you know, tomorrow the market rallies 100, 200, 300 points and they got trapped in an early short just because they felt like the market was going lower. The market started to break down here on 4/15. This is the first daily close below the 50-day moving average, which was very, very significant. And you can start to see here, and I'll actually put a couple of arrows. You can start to see once we close under that 50-day moving average on a daily time frame, we had the next area of support sitting here. Now, that next area of support was sitting at the 100 simple day moving average, and we had 1, 2, 3, 4 days of continuous selling into that 100-day simple moving average before we finally tried to make the attempt to dead cat bounce on Friday early, got rejected at this 5-day moving average, and started to confirm the loss of demand. Now, anytime you confirm a area of demand, you're always looking for some type of consolidation, some type of bounce, and then any confirmation through the previous day low, if you have space, right? So if you notice here, the next major area of support is going to be resting down here at this 150-day simple moving average. So what I would be looking for here, to be honest, is any type of bounce. Okay, let me pull my drawing tool back up. Is any type of bounce that gets rejected, I would be looking for that confirmation through Friday's lows into that 150-day simple moving average, and that would give us room all the way down to 16,721. That's going to be the trade that you're going to want to be involved in. Again, anything below Friday's lows that gets confirmed, any type of little bounce here, maybe it takes 1 or 2 days, but if we do get that flush, you're going to definitely want to be involved in that. Now, it doesn't have to be 2-3 days before this actually confirms short. We could actually just make a quick move up tomorrow in the pre-market or overnight session, get rejected at supply, and then start to actually lose Friday's lows, and you're going to want to take that short position. So again, that's what I'm going to be looking for. Now, on the long side, one thing that I'm going to need to see is I'm going to need to see a smaller time frame, see some type of supply get cleared out, and then give me some type of room. So what I'm looking for here is this 20-day moving average. 17,300 area is what I'm looking for to see get confirmed. So what I would like to see have happen here in this particular situation is I need to see some type of 1 hour close, okay, some type of 1 hour close over this 20-day moving average, and then I need to see price either pull back, go sideways, and on the following hour candle, I need that to get confirmed. And if that does get confirmed, the area of supply that I would be looking for is something around 14,436. So again, before you come into tomorrow with some crazy bias where the market has to bounce or it has to go down, the market doesn't have to do anything. What you need to be concerned about, and what you need to be aware of, is if we do confirm the lows, okay, if you do confirm the lows of Friday, you need to be ready to go short. And if we do close over the 20-day moving average on a 1 hour time frame and we get some type of pullback and confirmation, you need to be ready to go long. So again, maybe patience might be your best friend tomorrow. You don't have to rush and take those opening trades right as soon as the bell rings. But again, if you are one of those traders that is looking to trade those opening range breaks, there's a bunch of different strategies and techniques that you can use. You guys already know that I use the 5 SMA, or excuse me, the 5-minute time frame and the 20 SMA to kind of find scalps, okay? So for example, if we're just looking at this price action since the market has opened up here Sunday, I want you to notice just a couple of these plays start to set up. Notice how this candle closes below the 20-day moving average. The following candle confirms. This would be your entry candle, and you would try to ride this down for a little bit of momentum. Again, treat it as a scalp, right? For my risk to reward, I'm always kind of looking at the previous 5-minute candle. This was an 11-point range. So if I do take this particular trade, on this entry here, I'm just looking for 11 points down. I'm not really worried about how low it goes. I just want to get in, get green, and get the hell out. Your next potential setup was here. This close over the 20 SMA gets confirmed here. A little bit of a pullback, but then again, starts to rip up to the upside. Now, it doesn't provide a huge opportunity, but again, if you are a scalper, those are some trades that you need to look at. Now, again, we are looking at price action, technically in the overnight session, which I don't trade after hours. My time frame that I trade, my session that I trade is always going to be New York session. I might get involved in a little bit of pre-market action an hour before the market opens New York time. But again, I'm not really trading, all of this jazz here. It's just way too slow for me, way too choppy, and it's just not enough price action for me. But again, there's traders that do. Notice the little small body candle here that closes back over the 20 SMA. You have a clear stop loss here. Let me get this arrow out of the way. You have a clear stop loss here below the swing lows. And then once it confirms, you take it for a little bit of a ride higher. So again, depending on the time frame that you're looking for, you can definitely catch these waves and you can catch these scalps on a smaller time frame, the 5-minute, the 2-minute, the 1-minute. Just be aware and cautious of what's really going on the daily time frame, okay? So the daily time frame right now is bearish, okay? Short-term bearish. However, looking for some type of dead cat bounce, okay? Looking for some type of dead cat bounce. We could see an inside bar day where maybe we get to the top of the range, gets rejected going into Tuesday, Wednesday, and then starts to come back down. Once it does come back down, you want to be ready for that Friday's lows confirmation. You want to take that short position. Again, if we are going to dead cat bounce, on the bigger scale of things here, what you would need to see is a daily candle close over Friday's highs, consolidate for at least a day, and then push up higher. And then you would be looking for a run back into the 18,000s before we start to chop around again and either put in a leg higher or a leg lower. So again, even though this is looking at the daily time frame, that's your macro perspective. Your short-term perspective is definitely going to be on your lower time frames, your intraday time frames, your 30-minute, your 15-minute, your 5-minute. Again, the only difference between the smaller time frames is how much risk you want to put up. Obviously, if someone is playing a 30-minute or a 15-minute chart, your ranges are going to be bigger, which means your potential stop losses can be bigger. I like the 5-minute. It works well for me in my position size. Again, I'm normally trading 1 or 2 mini contracts and or 5 micros, depending on the range. If the range is not that big, I might be playing 1 or 2 mini contracts. But if the range is 30, 40 points, I might be playing something like 5 micro contracts. So again, hope you guys enjoyed the video. Hope you guys enjoyed your weekend. I'll see all of you guys this week on a future YouTube video. Make sure to like, comment, subscribe, and I'll catch you guys all next time.